What's going on with Snowflake Stock? The company reported earnings last night. The stock is down 15% this morning. Is this an opportunity to buy, or is the stock still too expensive? I'm going to break it down for you in this video today. I'll provide detailed analysis about the earnings report and the earnings call and some commentary from that call. We'll also look at valuation. I'm going to give you my opinions on the stock, and we'll look at a chart, and I'll tell you what levels I'd be buying Snowflake stock. Let's get after it. So you can see Snowflake is down about 16.5%. Trading at $148 a share. Now the market cap right now is about $48 billion. Of course, it does not have a PE ratio, no profitability, no dividend. Snowflake is a hyper growth stock, and it's starting to see some slowdown in that growth. But what about longer term? Is this going to be short-lived like an Nvidia that got to $108 a share, and all of a sudden you look back and say, I wish I would have bought Nvidia when it was $110? Or is this going to keep going lower? We're going to find out with this video. Now, memories are always short with the stock market. If you look at the 1 month chart, this actually was $135 just 1 month ago from today. So it's actually up over 9% in the past month, even after the fall this morning. You can see the 52-week low is $110.26. The 52-week high, $205.66. So I'm going to go through the earnings highlights here quick, rapid fire. And then I want to tell you the story about Snowflake's management team in case you aren't aware. So Q1, non-GAAP EPS of 15 cents. They beat by 10 cents. Revenue, $623.6 million, up 47.6% year over year. Beat by about 15 million. So what's the problem here? Some other positives: 373 customers with trailing 12-month revenue greater than $1 million. Net revenue retention of 151%. And out of the Forbes Global 2000 customer list, they have 590. So on one side, that's a positive because that's over 25%. But then also they have lots of room to grow that as well. Remaining performance obligations, $3.4 billion, representing 31% year-over-year growth. So here's where the problem lies. And we've seen this over and over during this earnings season. Guidance. Product revenue growth 33 to 34% year over year. So that's starting to decline. And that's going to fall in a range of 620 to 625 million below the 646.3 million analyst expectation. Now, one positive to note here, adjusted free cash flow, $287 million for the quarter. That's up 58% year over year. Do you like stories? I'm going to tell you a quick story, and I think it will be helpful to understand the management team. So Frank Slootman has been with this management team for quite some time. This is his third IPO. So Slootman first took the helm at Data Domain in 2003. So he was named CEO and took the company public at a valuation of $776.5 million in 2007. Now, Slootman grew this company from $0 in revenue to over $600 million annually, and eventually Slootman stepped down, and the company was sold to EMC for $2.4 billion. Now, that's impressive, going from 0 to 2.4 billion, and we're talking about 2009 here. So he turned in an annualized TSR of 18% in his 6 years. If you're not familiar with what TSR is, it just means total shareholder return. So 18% over 6 years, not bad. Then Slootman became CEO of ServiceNow. This was in 2011. That was his second IPO. Took him public in June of 2012. The company sported a 30% annualized TSR in that 6-year term. And then Slootman stepped down in 2017 and he went to Snowflake. Now, this is a tweet that was posted here May 24th, right after earnings. I blocked out the person's name to protect his privacy, but he said, Snow, do they need a new CFO? And I replied, it's one of the best CFOs on the planet. If you aren't familiar, Slootman's had this management team for a while. So Mike Scarpelli is the CFO, and he was the CFO at Data Domain, ServiceNow, and now Snowflake. Also, the head of HR has been with Slootman at all three. And Slootman and his team manage really a hard-nosed style. Here's a quote from Frank Slootman. Our companies were built and run for performance, full stop. We were single-minded in our pursuit of goals and drove our people to become the best version of themselves. Our companies were all Marine Corps, not much Peace Corps. So for me, the management team is one of the big reasons I have high conviction in Snowflake as a long-term investment. I own ServiceNow stock, made some good money with Slootman and his team, so I've been following this management team for quite some time. And I brought Snowflake to the YouTube channel here before the IPO. I've been bullish on it the whole time. Even in 2021, when this stock was running at crazy levels, we were saying in Discord, don't be surprised if this is $150 or less. It's crazy expensive. So I've been nibbling and constantly adding to this as it's gone lower. And my cost basis right now is pretty much around par, and I can add more shares. Now, just because the management team was successful a couple times, it doesn't guarantee a hat trick, but it certainly does increase my personal conviction in the business. And here's a good visual of the earnings highlights here. So we have $590.1 million in product revenue. That's up 50% year over year. here. That net revenue retention rate, 151%. Total customers, 8,167. That's up 29% year over year. 80% growth on that $1 million plus customers. There's 373 of those. We mentioned the 590 of the Global 2000. Snowflake Marketplace listings, 1894. Customer satisfaction, 100%, and 72 on the Net Promoter Score. So Snowflake is not SaaS. It's not software as a service. Think database warehousing, and it's really consumption-based. So you think about legacy solutions, you really had siloed data, and it was really hard for you to extract that data and to really use the data. And so when we talk about companies like Palantir, like Snowflake, it's about taking data, which is very powerful, and making it simple for businesses to use. And not just executives, but also just employees across the board. So you can really take that siloed data that's all kind of separate, this disparate systems, they don't communicate together, and put it together in one dashboard. And it allows you to data mine and really to use analytics in a powerful way. So when you think of the data cloud, it's really going to connect all these things together. So the partner data, third-party data, SaaS data, customer data, and so on. And I think that Snowflake actually has the ability to be an ad titan. There's a lot of total addressable market, and they're doing some exciting things when you think about third-party data and advertising. And I've done a couple videos on the YouTube channel before. In fact, there's an entire playlist on the channel. You can check that out. And make sure you subscribe if you haven't already subscribed. Click that bell for notifications. So Snowflake has a huge partner ecosystem, and this is really important. They collaborate and partner with everybody from Amazon Web Services, Google Cloud Platform, Microsoft Azure, and all the different names on your screen. You know, Accenture, Deloitte, all those big names, those big consulting names, ADP, Salesforce, ZoomInfo, and many more. And here are some of Snowflake's customers. So everything financial services, technology, advertising, retail, life sciences, and so on. Some big names on here. So it talks about the next wave of innovation. So 2014, disrupt analytics. 2018, disrupt collaboration. Today, disrupt app development. So CY26 platform TAM by workload, $248 billion. So this is where it can get confusing. They have a consumption-based model. So Snowflake recognizes substantial majority of its revenue as customers consume the platform. Now, this is important to understand why they might have a slowdown in growth when the economy has uncertainty. So they focus on product revenue and RPO. RPO is really important to understand if you're investing in Snowflake. So this is remaining performance obligations, RPO, represents contracted future revenue that's not yet recognized, hasn't been consumed. So you can see the first step is book. Customers typically pay annually in advance. Number two, they bill. Then three, customers draw down from bookings as they consume. So this is consume up here, and then consumption patterns dictate future bookings, and you go back to number one. Strong combination of scale and growth. So annual revenue in millions, you can see 69% year-over-year growth here. Quarterly revenue millions, you can see a steady growth upwards. It's just the growth isn't accelerating as much as it was. And this is a big slide. So now the RPOs, remaining performance obligation in millions, you can see Q4 FY 2023 to Q1 FY 2024. You can see a drop down. So you had this pretty nice growth, a big pop here, and it's starting to taper off. Obviously, part of the reason why the stock's selling off, and I'm going to explain why that is here later. There's some commentary from Frank Slootman on the earnings call. You can see the customer momentum is strong. Customers over $1 million. This is big here. If you look over the course of 1 year, it went from 207 to 373. And this is where they're focusing most of their energy on these large customers. And here's what they call strategic customers. So this is that Global 2000, the Forbes Global 2000 customers. It's grown from 513 to 590. And you can see here how the dollar-based net revenue retention rate has declined steadily. And this has to deal with the economy primarily. A couple of things there. As people get laid off, there's less people to consume the data, and then businesses are basically pushing back on pricing, and they're just doing the bare minimum right now when times are uncertain. You can see the gross margins are steadily improving as well, and their free cash flow generation has been pretty impressive here, some pretty big jumps. And Snowflake is continuously hiring more people, trying to grow that sales team and bake out the product with development. So next I'm going to cover some highlights from the earnings call. So this piece here is from Frank Slootman in his opening commentary. We are, however, operating in an unsettled demand environment, and we see this reflected in consumption patterns. While enthusiasm for Snowflake is high, enterprises are preoccupied with costs in response to their own uncertainties. We proactively work with customers to optimize their environments. This may well continue near term, but cycles like this eventually run their course. Our conviction in the long-term opportunity remains unchanged. That's also why my conviction in the stock remains unchanged. So here he talks about generative AI, how it's captured captured the imagination of society at large. It'll bring disruption, productivity, as well as obsolescence to tasks and entire industries alike. These are powerful words. Generative AI is powered by data. That's how models trained and become progressively more interesting and relevant. As Snowflake manages a vast and growing universe of public and proprietary data, the data cloud's role in advancing this trend becomes pronounced. AI's focus on large language models and textual data, both structured and unstructured, will lead to rapid proliferation of model types and specializations. This is basically telling you that Snowflake is going to have a lot more demand later as this stuff with AI bakes out, with generative AI bakes out. It's going to be lagging. And then you also have uncertainty with the market as well it's making the usage, the consumption less. So you could see an accelerated snowball effect on the other end of this maybe in 12 months. So this is still Frank Slootman here. From our perspective, machine learning, data science, and AI are workloads that we enable with increased capability, continuous performance, and efficiency improvements. And he talks more about this. It goes on and on. Data science, machine learning, and AI use cases on Snowflake are growing every day, and so on. The Snowflake connector for ServiceNow. No surprise that they're partnering with ServiceNow. His old company was CEO of ServiceNow prior. So this is in public preview, and I think this could be big as well. And UiPath in their earnings last night also announced a new integration with Snowflake. They're working with more and more of these partners. They also launched Manufacturing Data Cloud, which I think could be big for them. And this actually ties back into that UiPath announcement. They also announced Blue Yonder. This deals with supply chain management. That's going to fully re-platform onto Snowflake. So Blue Yonder is a key participant in both manufacturing and the retail data clouds. So let's talk about the big announcement here. This is something that I think is maybe a little bit misunderstood by the market. They're trying to digest this. We announced our intent to acquire Neeva, a next-generation search technology powered by language models. Engaging with data through natural language is becoming popular with advancements in AI. This will enable Snowflake users and application developers to build rich, search-enabled, and conversational experiences. We believe Neeva will increase our opportunity to allow non-technical users to extract value from their data. So think of a non-technical user. It could be somebody that's in sales or in management and so on. They're going to be able to extract this data more easily. So imagine basically a chatbot like ChatGPT, but instead of it being public faced, it'd be kind of like a company intranet. So just inside the company internet to data mine, and it could be proprietary information and so on from the company, or even third-party vendors and what have you. But essentially data that's not publicly facing, that you would want to search in your business. So there's 40 employees from Neeva they're bringing on, and lots of these are engineers and they're very expensive, and that's baked into the guidance as well, and that did impact some of the numbers slightly. So an analyst asked a specific question: what do you get with Neeva? Why is it important? What does it unlock for your customer base relative to generative AI? And I kind of explained it a little bit earlier, but let's get the answer directly from Snowflake. The broad vision that we communicated to all of you over the last several years is Snowflake is on a mission to extend its capabilities so we can bring computation to happen close to the data. It has evolved into an application platform. And a core use case for applications is not only search and search-enabled experiences, but with the advent of generative AI is the notion of conversational experiences. So not just getting the data and getting dry, kind of stale, static data, but conversational data where the AI is essentially giving you the answer, but in a way that you can ask questions and get answers like you're talking to a person. And the folks from Neeva are the ones that are going to power that to help us accelerate the efforts around Snowflake as a platform for search and conversational experiences. But most important, within the security perimeter of Snowflake with the customer's data, so they can leverage this new innovation and technology, but with the safety and privacy and security of their data. Exactly like I said earlier, being able to use internal data and search and have conversational AI. So it's like a ChatGPT, but customized just for your business, and that privacy and security, because you don't want everything available to the public, of course. So next we're going to look at valuation and a chart, and I'm going to give you some different price targets. Before we do that, I need to announce this video is sponsored by the Motley Fool. If you'd like to see the 10 best stocks to buy now, visit fool.com/firedupwealth. You can also join our private community Patreon Discord by visiting patreon.com/firedupwealth. And if you're new here, please subscribe to the channel, click that bell for notifications. Trying to get this channel to over 40,000 subscribers this year, and you can help me out by subscribing today. And if this video is useful, please drop me a like and a comment. Appreciate you. So valuation. Snowflake is difficult because, again, it's not software as a service, so it doesn't have that recurring revenue. It's consumption based, but it does get thrown grown into that cloud SaaS bucket. So if you want to look at something like an EV NTM revenue, it trades around a 20x, a little bit lower than that after the sell-off, but it's one of the most expensive stocks on the planet. With that said, I'm going to show you a few different metrics on Fidelity here next, and then we're going to look at a chart. So right now, Snowflake is down over 18% at $144.52. Market cap, $57.57 billion. Has about 4.53% short interest. So price to sales ratio, 27.5. Price to book, 10.5. Now this is where it starts to get interesting because I've been telling you for a long time, this should be a spec stock and it probably still should be a spec stock for most people. But the PE based on this year's estimate is 294 and next year's estimate, according to Fidelity, is 178.7. Now 178 P ratio is still very expensive, but now we're starting to talk about a PE ratio in earnings, not just ridiculous PS ratios and EV NTM revenues. So what happens if that growth starts to accelerate again on the other side of this economic slowdown? How long would it take for Snowflake to really grow into its valuation? And you could argue that it's still expensive at $145 a share, no question. But you got to remember this stock has really been trading kind of sideways and in a range for quite a long time, and it's been growing that entire time as well. So if I were an investor and I were growth focused and I had a risk appetite, I'm gonna be looking at this stock under $150 now and saying, hey, a lot of people bought this way more than $150 2 years ago. If I'm starting a new position, what price would I want to buy that would make sense if I'm holding this for 5 or more years? And I'll tell you my thoughts here next on a chart. But in a nutshell with Snowflake, what's going on here is you've got a slowdown in consumption. You got a slowdown because of economic uncertainty, and it makes total sense. We've seen this across the board, and a lot of these companies like Datadog was down and basically thrown in the trash, and then all of a sudden it goes from $60 to $90 overnight. The big thing about Snowflake is this is an AI platform. When I did earlier in the year in January, I did a top 10 AI stocks to buy for the next decade, and Snowflake was on that. I have high conviction in this stock for many reasons, but AI is definitely one of them. Really what you're talking about here is the first company that's starting to develop an internal chatbot. And if you don't think that's powerful, you're very mistaken. Because here's the thing, a public chatbot is great, but a lot of those queries are going to be free, or you're going to pay a very low price to use that as a consumer, as an individual. Think of a corporation, like a Fortune 500 company, an S&P 500 company. Think of how much they would pay just per user for an annual kind of subscription to a service like that. I think the monetization could be very powerful for a tool like that, but more importantly, it's going to boost consumption because it's all going to be tied back to their consumption model. So now if you're using that chat bot and you're using it and it's more entertaining, right? Because you're talking to a chat bot and you're getting conversational experience, you're more likely to use the data. That means you're going to consume more of it and Snowflake's going to make more money. This is very smart. And I don't know if the market's completely figured it out yet, but I think it's going to be absolutely massive for Snowflake. So I think this acquisition of Neeva is brilliant. And from what I saw on the earnings call, the analysts that I saw at least didn't really fully understand what the point was. The point is simple. People enjoy using a chat bot versus just a static query. Right now you just have a static query, you pull the data, it's pretty boring. Conversational AI is more entertaining, it's more engaging, and you're going to use it more, and you're going to consume more data, and Snowflake's going to make more revenue. So every single Wednesday we do what's called Chart Day in Patreon Discord, and you can join us again, patreon.com/firedupwealth. When you see orange, that's a previous chart day. Yellow is today's chart day. I'm just going to give you my thoughts here. So it's trading right now at $144, and you can see it's really in this range. So this S3 is all the way down here at about $124. This R3 is $170. So this is Fibonacci. You've got your supports and resistance. And it doesn't mean it has to stay within this line, but it gives you an idea of levels of where it could go. So this first support line down here is about $138. This morning in Discord, I told the gang, look for 150 first and probably 142 is where I thought it could go as a possibility. Now, it could try to hold up around 142. I think there's a good chance it maybe breaks that. I would be looking at this stock personally if you don't own it. If you count this as spec, you understand the risk, know it's expensive. I'd love to see the stock 135 or less using DCA, dollar cost averaging. Now, I'm not a financial advisor. I can't tell you what to do with your money. And you could certainly make an argument that I'm insane, even paying $135 for Snowflake. This would be for a 5-year long-term type investment. I believe with a lot of conviction that Snowflake will be worth a lot more than $135 in 5 years. Now, I could be wrong. I've been wrong before, but you look at like NVIDIA, for example. I've been bullish on that stock since 2018. I bought it in the 30s. When it was $108, people were coming on YouTube and poking fun, saying it was going to go to $50 and that I was an idiot and all these different things. And now all of a sudden the stock runs up to $350, $400 and everybody wants to buy the stock. I feel like Snowflake will be like that at some point as well. When you think of AI stocks, there's really a dozen or so stocks that stick out to me when I think of platforms. So we talk about on the top 10 AI videos. And if you haven't seen that, go check it out. I did a top 10 AI video, top 10 AI stocks for the next 10 years. Snowflake's on there, but we talked about, NVIDIA and AMD, semiconductors, the new oil that's going to fuel that. And then the platforms. So you think of Microsoft, the partnership with ChatGPT, you think of Google with Bard AI. Now we did this in January before most of these announcements were made, and these stocks have run really hard since then. I think when the economy recovers on the other side, Snowflake's consumption will increase. I think people will start to figure out the benefits as well with the Neva acquisition. And I could see this stock easily being, $200 in 12 months time. So you do what's best for your money. This stock is not for everybody. It's one of my top holdings. I'm bullish. I have conviction, and I tried to share the reasons why in this video. I'd be targeting 135 or less, and that might not happen. If I were really bullish, I don't even mind the stock right here, to be quite honest with you. I think if you look at 145 or less and you nibble a little bit and nibble more as it goes down, I personally don't think it's bad under $150 when you're thinking long term. Of course, the lower the better. And this stock did get all the way down to $111 at one point, so that's always a possibility. But it's much simpler to justify the valuation at $135 today than it was a year or two ago. The company has grown a lot since then, improved free cash flow, margins, profitability, all those different things. The only thing that they're not accelerating upwards right now is unfortunately growth, but that growth I think will be back. And this is going to be a beast at some point, and hopefully in a couple years you'll be watching this video and you'll be clapping along as the stock runs higher. I appreciate your time and attention, guys. Make sure you subscribe to the channel, click the like button, drop a comment. Have a great rest of your day. Take care.